Welcome to our deep dive into the world of finance, where we explore the life of Larry Fink, the CEO of BlackRock, and the controversial truths surrounding one of the largest asset management firms in the world. With over $9 trillion in assets under management, BlackRock wields immense power in global markets.
BlackRock, State Street, and Vanguard control $22 trillion in assets, which is roughly the equivalent of the entire gross domestic product of the United States of America.
But this influence comes with significant scrutiny. In this video, we'll uncover the story of Larry Fink, the rise of BlackRock, and the criticisms that challenge its practices and impact on society. Lawrence D. Fink, commonly known as Larry Fink, was born on November 2, 1952 in Van Nuys, California. Growing up in a middle-class Jewish family, Fink was instilled with a strong work ethic and a desire to succeed. He graduated from the University of California, Los Angeles, with a degree in political science, and later earned an MBA from the Wharton School of the University of Pennsylvania. Fink began his career in finance at First Boston, where he specialized in bond trading. His keen understanding of risk management became apparent early on, but a significant setback in the 1980s, a $100 million loss due to a miscalculation in bond trading, led him to rethink his approach to finance. This experience would shape his future endeavors and the founding principles of BlackRock. In 1988, Fink co-founded BlackRock as a risk management and fixed income institutional asset manager. The firm started with a focus on providing clients with sophisticated risk management tools, leveraging technology to analyze and mitigate investment risks. This innovative approach quickly set BlackRock apart from its competitors. By the early 2000s, BlackRock had established itself as a dominant player in the asset management industry. The firm's growth was fueled by strategic acquisitions, including the merger with Merrill Lynch Investment Managers in 2006, which significantly expanded its reach and capabilities. The acquisition of Barclays Global Investors in 2009 brought the iShares ETF business under its umbrella, further solidifying BlackRock's position as a leader in the investment world. With its vast assets, BlackRock holds significant sway over companies and governments worldwide. The firm's investment decisions can impact stock prices, influence corporate policies, and even shape national economies. BlackRock's size and reach have led to concerns about its concentration of power in the financial system. Fink has often emphasized the importance of sustainability and responsible investing, promoting the idea that companies should focus on long-term value creation rather than short-term profits. In 2020, he announced that BlackRock would prioritize sustainability in its investment strategies, a move that garnered both praise and skepticism. Critics argue that while BlackRock talks about sustainability, its actions often tell a different story. Despite its reputation as a leader in responsible investing, BlackRock faces significant criticism on several fronts. Critics argue that BlackRock's size allows it to exert undue influence over the companies it invests in. With stakes in major corporations across various sectors, BlackRock's voting power in shareholder meetings raises concerns about conflicts of interest and the potential for prioritizing profits over social responsibility. For instance, BlackRock is one of the largest shareholders in companies like ExxonMobil and Chevron, leading to accusations of hypocrisy regarding its environmental commitments. While BlackRock has positioned itself as a champion of sustainability, it has been criticized for its continued investments in fossil fuels and industries that contribute to climate change. Activists argue that the firm's actions do not align with its stated commitment to environmental responsibility. In 2021, BlackRock was one of the top investors in coal companies, prompting backlash from environmental groups who demand a more aggressive transition to renewable energy. BlackRock's role in the financialization of the economy has drawn scrutiny. The firm's focus on asset management and investment strategies has contributed to rising inequality as wealth becomes increasingly concentrated among the elite. Critics contend that BlackRock's practices prioritize shareholder value over the well-being of workers and communities. The rise of passive investing, largely driven by BlackRock's ETFs, has also been linked to a decline in corporate accountability and a focus on short-term gains. BlackRock's close relationships with government officials have raised eyebrows. Fink himself has been involved in various advisory roles, including during the COVID-19 pandemic, when BlackRock was tapped to help manage the Federal Reserve's emergency lending programs. This connection has led to concerns about the potential for conflicts of interest and the influence of corporate interests on public policy. Critics argue that BlackRock's involvement in government decision-making blurs the lines between public service and corporate profit. The implications of BlackRock's practices extend beyond the financial sector, affecting communities and the environment. As one of the largest asset managers in the world, BlackRock's investment choices can dictate the direction of entire industries. This power raises critical questions about accountability and the role of financial institutions in shaping societal outcomes. The prioritization of shareholder value often comes at the expense of workers. Companies under BlackRock's influence may focus on cost-cutting measures, including layoffs and wage stagnation, to boost profits. This trend contributes to the growing wealth gap, as the benefits of economic growth are increasingly concentrated among the wealthy elite. BlackRock's investments in fossil fuels and other environmentally harmful industries disproportionately affect marginalized communities. Environmental degradation, pollution, and climate change have a more significant impact on low-income populations, raising concerns about environmental justice. Activists argue that BlackRock must take responsibility for the social and environmental consequences of its investment decisions. The intertwining of corporate and political interests raises alarms about democracy and governance. As BlackRock continues to grow, its influence over public policy and regulatory frameworks could undermine democratic processes. Critics warn that the concentration of power in the hands of a few large asset managers poses a threat to the principles of accountability and transparency in government. As we look to the future, Larry Fink and BlackRock face the challenge of navigating a rapidly changing financial landscape. The firm is increasingly focused on integrating environmental, social, and governance (ESG) factors into its investment strategies, responding to growing demands from investors for responsible and sustainable practices. However, the criticisms surrounding BlackRock's influence and practices will likely persist. As the firm continues to grow, it must address the concerns of activists, regulators, and the public regarding its role in the economy and society. Fink's vision for BlackRock will be tested as the firm seeks to balance profitability with social responsibility in an era of heightened scrutiny and demand for accountability. Moreover, the rise of alternative investment models, such as community investing and cooperative finance, presents a challenge to BlackRock's traditional approach. As more investors seek to align their portfolios with their values, BlackRock may need to adapt to a new landscape where social impact is as important as financial returns. In conclusion, Larry Fink's journey from a bond trader to the CEO of the world's largest asset manager is a remarkable story of ambition and influence. However, the controversies surrounding BlackRock highlight the complexities of power in the financial world. As we navigate the future of finance, the questions surrounding corporate responsibility, sustainability, and the role of asset managers like BlackRock will remain at the forefront of public discourse. The story of Larry Fink and BlackRock is not just about wealth and power, it's about the responsibility that comes with that influence. As we continue to scrutinize the practices of financial giants, we must also consider the broader implications for society and the environment. What are your thoughts on Larry Fink and BlackRock's impact on the global economy? Share your thoughts in the comments below. Stay informed and subscribe to my channel if you want to see more videos like this.